Hi, in this video, we'll look at content of group account and group structure. The information that is contained in the individual financial statement of a parent and its subsidiary or subsidiaries cannot give the entire picture of the group activities. And for this reason, we need to prepare a set of group financial statements from the individual ones. Consolidated account or group accounts combines the separate accounts of the parent and its subsidiary or subsidiaries as if they were of a single entity. In this context, group accounts and consolidated accounts shall be used synonymously. So what is consolidated financial statements? When we are preparing consolidated financial statements, we simply add the assets and the liability of the parent and each of the part of the subsidiary. And we add everything as though all the subsidiaries were wholly owned, even though some of them may be partly owned. The equity and the liability section of the statement of financial position indicates how much of the net assets belong to the group and how much belongs to the outside investors, particularly in partially owned subsidiaries. We always like to refer to those outside investors as non-controlling interests. Some old books would refer to them as minority interests. Non-controlling interest is the equity in a subsidiary not attributable, directly or indirectly, to a parent. We should present the non-controlling interests in our consolidated statement of financial position together with equity, but separate from that of the parent. How is the group structure like? Or how does a parent own a subsidiary? The parent can own a subsidiary through what we refer to as direct interests. For instance, in the diagram that we have P owning directly as one, and it owns 100% of the equity capital of S1. And therefore, P owns S1 100%. And therefore, we could say S1 is a wholly owned subsidiary of P. However, subsidiaries S2, S3, and S4 are only partly owned. And those other shares which are not owned by the parent are owned by the non-controlling interests. For instance, P owns 80% of S2, and therefore 20% is held by the non-controlling interests. It's possible for a parent to own a subsidiary indirectly, like in the figure that we have on our right-hand side. P owns 51% of S, and therefore P and S would form a group where S is partly owned by P at the rate of 51%. On the other hand, S owns 51% of SS, and therefore to SS, S is its parent company. since it owns 51%. Does P own SS? Yes, it does, but indirectly. What is its indirect ownership? Its indirect ownership would be 51% times 51%, and that would give us 26%. And even though P can be able to control SS, it can only do that indirectly by virtue of the chain of control. To SS, S is its parent, and P is its ultimate parent. IFRS 10, I hope you know what IFRS 10 stands for, requires a parent to prepare consolidated financial statement. By the way, the title of IFRS 10 is Consolidated Financial Statements. What are consolidated financial statements? These are financial statements of a group in which assets, liabilities, equity, income, expenses, and cash flows of the parent and its subsidiaries are presented as those of one single entity. The consolidated financial statement consists of the parent company financial statements, which will always be provided for in the event of an examination, the consolidated statement of financial position, the consolidated statement of profit or loss and other comprehensive income, and the consolidated statement of cash flows. Now, the last three statements, you might be required to prepare any or all of them, but in each case, the financial statement of the parent and the subsidiary or subsidiaries, as the case may be, would be presented. That marks the end of that short video. In the next video, we'll look at how we prepare a separate, a group financial statement, but we shall start with consolidated statement of financial position when you are given the parent and the subsidiary financial statements. In the event you have questions or comments, you can post them in the comment section of this video, but please remember to subscribe. Thank you.